a member of the Nigeria Stock Exchange from December 2015. He started his accounting career in 1995 with the audit firm of Aremu Akindele. Thereafter, he joined Lassa Limited in 1996 as an account officer and rose to become the investment accountant of the company. He joined Global Scan Systems Limited during his formative years as the chief accountant. Due to his outstanding contribution to the growth of the organization, he was made the head of finance, human resource, and admin in 2009. Mr. Idebo is a fellow of the Institute of Chartered Accountants of Nigeria, fellow Chartered Institute of Stockbrokers, and many more other professional bodies. Mr. Idebo is presently on the board of the Association of Certified Fraud Examiners, Southwest Chapter. As the Deputy Vice President, was the Pioneer Training Director of the chapter and a board member of Stewards Theological Seminary. He is a member of the Branding and Publicity Committee of the Chartered Institute of Taxation of Nigeria and a member of Finance and General Purpose Committee of the Chartered Insurance Institute of Nigeria. Mr. Idebo is a good trainer and speaker on professional subjects such as accounting, auditing, tax, fraud, ethics, investigation, insurance, and capital market products. Having introduced him to us, the Honorable House, I'll be glad to hand over this session to him to speak with us on the subject matter as mentioned. Thank you. Mr. Idebo, you have the floor, sir.
Thank you so much, sir. Good afternoon, professional colleagues. I am highly delighted for this singular honor given to me by the very dynamic and highly vibrant District Association of Ican. I'm glad to at least share the bit that I know concerning this topic of discourse with us today. My sincere appreciation to the chairman of the district and all the ESCO. And I want to thank my fellow professional colleagues for indulging me with their time at this hour. I'll be talking on IFRS 9, that is accounting for financial instruments. Do I have the right to share my screen from here?
Yes, you have the right.
Okay, so I'll just bring up my slide and then begin to speak to the paper of this course. Sorry, I'm just going to see what I have. So many documents open on my system. Do let me know if you can see my screen.
You can see the alert.
Oh, the alert is the one you see. Apology for that. Let me drop all of those alerts and then just leave my paper. Let me just shut down all of the others. My apology for this, but that wouldn't take away any of our time. We'll still be able to cover up what I have for us today. Can anybody see my screen?
Yes, you can see it.
Okay, so am I having the right paper projected?
You're not seeing it again, though.
Let me help you to share your screen, sir.
No, I can do it again over from here. Please confirm if you can see the paper.
Yeah, yes, we can see it now.
Yes. Great. Okay. Well, like I said, I'll be speaking to us on accounting for financial instrument, and that is IFRS 9. Our learning objective will not be too many. I have about 40 slides and I have 45 minutes to make my presentation. And so I'll be a little bit fast, but that will not take away the meat from the discussion. I had a landing slide so that anybody can pick the paper and read it up and it will make sense to everybody. I know the standard rules for presentation like this, your slide shouldn't be more than 16 slides for a paper of 45 minutes. So I'm very well familiar with all of that. But because I wanted everyone uh, who is not even a part of this discussion to pick the paper and be at home with it. Our learning objective shall be in 4 parts. We want to define and identify the various types of financial instruments, and then we'll discuss the recognition and measurement requirements for financial instruments. And we'll try to explain how to determine the carrying amount of various financial instruments in accordance with the provision of the standard. And then we'll demonstrate how to account for financial instruments. By way of introduction, IFRS 9 specifically is centered on how to classify and measure financial instruments. There are 3 main areas that the standards speak to when it comes to financial instruments. The first is classification and measurement of financial assets and liabilities. The second is impairment methodology. And then the third is hedge accounting. We'll only discuss 2 of these 3 broad areas that the standards speak about. We'll not be going to hedge accounting because that is a technical area. And if we want to speak about that, it will create more confusion today. And what I was asked to speak on centered around the first 2 areas that we mentioned. That is classification, measurement, and impairment methodology of the standard. By way of definition, financial instrument could be said to be a contract that gives rise to financial assets of one entity and a financial liability or equity instrument of another entity. Let me just break it down a little bit. In accounting, we say for every debit entry has a corresponding credit entry. If I take my money and I put it in my bank account, in my books, I would debit my books. But the bank will create a liability for me on their end, and they will credit my account with that, with the same amount. And so we say financial asset of one company is a financial liability to another company. So when we talk of financial instruments in terms of financial asset and liability, we're talking of the same thing, but we're looking at them from the perspective of different entities. Having said that, we also want to define what a financial asset is. I would say a financial asset is any asset that is either cash, which is a contractual right to receive cash, or another financial asset from another entity, or to exchange financial assets or financial liability with another entity under conditions that are potentially favorable to the entity. Financial asset is either cash or cash-like asset. Or if you say you may want to extend it to say you want to exchange one financial asset to another financial asset of one entity or the other. Then the next is financial asset could also be said to be an equity instrument in another entity. An equity instrument is a contract that will or may be settled in the entity's own instruments, and it is a non-derivative for which the entity is or may be obliged to receive variable numbers of the entity's own equity, and it could also be a derivative that will or may be settled with other than the exchange of a fixed amount of cash. The next thing we'd like to define is financial liability, which is a contract obligation to deliver cash or another financial asset to another entity, or to exchange financial asset or financial liability with another entity under conditions that are potentially unfavorable to the entity. The other term we like to define is impairments. Impairment is the possibility of not receiving the full value of an asset. When an asset is said to be impaired, it means that you are not going to get full value from that asset. Then we also want to describe a derivative or define derivative. Derivative is just a term that refers to a type of financial contract whose value is dependent on an underlying asset. Derivatives do not have value on their own, but they depend on the assets that they underlie to get a value. For those in stockbroking, you may understand this a bit more. If time permits, when we get to impairment, we may speak a little bit about this. And then the last time I would like to define is compound interest. The compound interest are instruments with two components. That is, they have both equity and liability components in one. For IFRS 9, for you to properly, possibly, and accurately account for compound instruments, you need to split them into their various components using what we call split accounting. Example of such are convertible bonds. That is, bonds that have the nature of a liability and can also change to become an equity. Some example of financial instruments. We'll start with financial assets, trade receivables. We have cash and cash equivalents. We have equity investments, derivative investments, corporate bonds, government bonds, treasury bills, loan receivable, intercompany loans and receivables, bank deposits, fund investments, and the likes. While financial liability include trade payable, loan notes, commercial paper, bank loans, corporate bonds, mortgage-backed security, debentures, and repos. These are just some examples of financial liabilities, so that as we speak, we may be able to relate to some of them. I've been told to speak on IFRS 9, and that is the standard that speaks to financial instrument. Unfortunately, IFRS 9 is limited because IFRS 9 only recognizes and deals with measurement of financial assets only. IFRS 9 deals with financial assets only. Other standards that deals with financial instruments include IAS 32, and that focuses on financial liabilities and equity, and also IFRS 7, and that speaks on financial instrument disclosures. So I'll a bit speak to the three of these standards in trying to explain IFRS 9, not minding that they may not be covered by what I've been asked to speak on. But it's not going to take our time, like I said. We're going to run over them as quickly as possible. The scope of what I'm delivering today is entirely on financial instruments, and there are some aspects of financial instruments that are excluded. Number one is investment in subsidiaries, associate, and joint venture. Financial instrument standards speak to investments that are below 20% holding in another organization. And so once you have 20% holding in an organization, you are expected to treat that investment as an associate. That is outside the scope of IFRS 9. That's within the scope of IFRS 10, IAS 27, and IAS 28. What we're speaking on is also not to deal with an organization acquiring its own equity instruments. And that is covered under IAS 32. So we're not speaking about that. Then we're also not looking at leases that fall within the financial instrument space, because a standard covers that comprehensively, and that is IFRS 16. So we're not speaking to leases. We're also not speaking about employee benefits. Another standard covers that, even though that may fall under financial liability. There is IAS 19 that covers that in details. Then also, we're not also looking at share-based payments, because IFRS 2 covers that. We're also not looking in detail at forward contracts. IFRS 3 speak more about this. And then we're also not looking at rights and obligation under insurance contracts. Insurance contracts have a standard that became effective in the year 2023, and that is IFRS 17. That standard replaced IFRS 4, which was the former standard used by insurance company. And also, we're not looking at issues of contingent liabilities and also contingent assets. That is also covered under a different standard, that is under IAS 37. I'll look at classification of financial instruments. Financial instruments are broadly classified under two broad categories. They are either called equity instruments or debt instruments. Equity instruments entails investment in shares of other entities, while debt instruments involve investment in the debt instrument of other entities. Example of debt instruments are preference shares, bonds, convertible securities, and all the likes. We can further classify financial instruments based on the way they are reported. And under this classification, they are broadly classified under three headings. The first is at amortized costs, and the second is at fair value through profit or loss, and the third is at fair value through other comprehensive income. So financial instruments are broadly classified in that space. The first under that is financial assets. For me to identify an asset as a financial asset, there are some keywords that I should be looking at that will show to me that these items are financial assets. And usually, if I'm reviewing a financial statement, by way of notes, I'll be looking at things like bought, acquired, purchase, or invest. If a company said they bought the share of another company, then I know that a financial asset must be recognized in the book. If they say they acquired shares in a company or purchase or invest in another organization, I should be expecting that a financial asset will be created in their statement of financial position. This is how we know financial assets. Financial liability, on the other hand, are classified into two based on the way they are reported. Either they are classified at amortized costs or they are classified at fair value through profit or loss. So for financial liabilities or equity, there are just two classifications: amortized costs or fair value through profit or loss. How do we recognize financial asset, and when should we recognize financial assets? Financial assets are recognized the moment an entity becomes or come into a contractual agreement for that financial instrument. That is, the moment it becomes a party to a contractual provision of the financial instrument, there must be an agreement between two parties. One is providing service, the other one is receiving value. For a liability or for an asset to be classified as financial asset, there must be an agreement between two willing parties that comes together. For the sale of shares, there must be somebody who is buying the shares and someone who is selling the shares. The person buying the share is called the shareholder. The person selling the share is called a company. Issue that are statutory cannot fall under financial asset or financial instruments. Take, for instance, you enter into a transaction that will require the payment of value-added tax. You cannot treat value-added tax as a financial asset if you are to recover it. For those that are within the manufacturing space, you can't treat it as a financial asset, even though you can recover it, because it is a statutory provision. Either you like it or not, that must apply. So you don't, those don't fall within the ambit of financial instrument. And at what time do you de-recognize a financial instrument? You de-recognize them from the book when the contract expires, or when the contract is cancelled, or when it has been discharged, or when the risk and reward has been transferred. So when your right to that financial asset no longer exists, then you de-recognize them from your book. Measurements of financial instruments. This is mainly where we're going to. And to measure financial instruments, we need to look at them from two perspectives. The first is financial assets, and then we'll look at also financial liability. Under financial asset, like I said, there are two broad categories, equity and debt. So we'll start with equity. How do we measure equity financial instruments? They are usually measured through profit or loss. They are usually measured through profit or loss. So that is usually the default for equity instrument. And so we say they are fair value through profit or loss. When we enter into a contract for equity financial instrument, the initial recognition for it is that it should be recorded at the purchase price. For all equity financial instruments, we record them at the transaction price, that is the purchase price. Transaction costs should be expensed to the P&L. Don't capitalize it for equity. That is, you bought shares from the Nigerian exchange for your company. Usually you pay brokerage commission, you pay CSCS commission, you pay NGS commission, you pay SEC commission for that purchase. You don't capitalize those transaction costs, the payment you made to your stockbrokers, to NGS, to CSCS, to stock exchange for that transaction. Those expenses are to be expensed. You write them off immediately to your profit or loss. They are written off to your profit or loss. During your reporting date, these instruments are required to be fair valued at their market prices. And so we'll look at subsequent recognition at reporting date. You remeasure the investment to their fair value at the year end. I'll come again for equity that are listed on the Igds. They are usually marked to market on a daily basis. So you can easily get the share price of that equity from the NGS. You can easily get. So what you do is you check for the value of the share at the end of the reporting date. Then you compare it to the initial value at the purchase point and look at the difference. If there is a gain or loss at the end of the period, you write them off to your P&L. That is for equity instruments that are fair value through profit or loss. You write off whatever gain or loss. If it is gain, you recognize it as an income, as an earning in your P&L. But if it is a loss, you recognize it as a leakage to your P&L. We always carry the investments under the statement of financial position as current assets. Under the statement of financial position, they are usually carried as current asset. I have an example here, which is something just straightforward. Maybe I should just leave this for all to read up because of my time. I'll move on to, I just try to bring up some extracts on how you can show them on your statement of financial position and also on your statement of profit or loss. On the statement of profit or loss, there is a line item we call fair value gain or loss on financial asset at fair value through profit or loss. While the transaction cost, you take it to your other operating expenses. Each industry have how they classify this. I'm using an insurance sector presentation here. Then under the statement of financial position, your formal balance sheets, it will be stated under your asset column, and under that asset column, there's a column we have financial assets where you list all financial assets. You have the one that are fair value through profit or loss, you have the ones that are fair value through OCI, and you have the one that are carried at amortized cost. So it will be listed under the shares that fall within fair value through profit or loss. For the second categories of financial instruments, those that are fair value through other comprehensive income. Please, if you are not told that default recognition for financial instruments is for them to be fair value through profit or loss, that is the default. But organizations have the right of election to carry them either through other comprehensive income or to carry them at amortized cost. But for equity, you can only carry through fair value through profit or loss or fair value through other comprehensive income. There is a little difference in the treatment. The recognition, both of them are treated the same way. Then at the end of the period, you must remeasure the investment to their fair value. Gain or loss will be taken to your statement of profit or loss, but it will be other comprehensive income. So your recognition of profit will not be on your P&L segment of your statement of profit or loss and other comprehensive income statement, but you will show it within the segment of other comprehensive income, and it will be shown as gain or loss from fair value through OCI. The gain, you also create a reserve for it under equity. It is called fair value reserve under the equity column. The exercise, I repeated it here, and I used the fair value through OCI to compute it. I mean, to solve the solution. For debt instruments, there are two basic tests that a debt instrument will pass for it to be treated under amortized cost. Number one is the business model test. The business model test. And the second one is the cash flow characteristics test. The business model is just that the objective of the entity business, if it is to hold the financial asset to collect the contractual cash flow rather than to sell the instruments prior to its contractual maturity to realize its fair value changes. So for debt instruments, there is a test we use for it, usually the cash flow. And the test is to look at the instrument if it is solely held for the payment of principal and interest. If it is solely held for the payment of principal and interest, then we look at three options that could arise. If we are holding it to collect principal and interest only, you recognize it at amortized cost, and that is for this last column here, hold to collect. You recognize at amortized cost. But there are some times that you may not want to wait till the end of the lifespan of this debt for debts that are traded, equity traded debts. You may want to take advantage of either rise or drop in the value of the debts. And then you may decide to hold the instruments. If the conditions are not favorable, you hold to collect. But if the condition is favorable, you may hold to collect some of the interest and also sell. If that is your business objective, you must fair value that instrument through other comprehensive income. You must fair value it through other comprehensive income. But if the business ideology of the organization is we just trade on this debt, we buy when condition improves, we sell. That is, you are holding to sell. You're not waiting to either collect cash or waiting to maturity. Your business idea is to sell. If that is the understanding or the ideology of the business, that debt instrument must be fair value through profit or loss. You fair value it through profit or loss. But if the cash flow characteristic does not meet your solely payment of principal and interest criteria, you fair value through profit and loss if it doesn't meet any of the cash flow criteria. Like I said, the default under IFRS 9 is fair value through profit or loss. The only thing that is changing here for debt instrument is the amortized cost option. The amortized cost option is treated the same way with fair value through OCI, through other comprehensive income. It's the same thing we do. The only thing is we must determine the carrying cost of the debt. We determine the carrying cost of the debt. I'll speak into that very shortly. Key word to know if a financial instrument is a liability is that you hear them say issued or sold. If a company issued debenture, you know it's a financial liability, or if they sold loan stock, you know it's a financial liability. For debt, the initial measurement is that the transaction for fair value through P&L, you carry it at transaction price. Then transaction cost should also be expense. You don't capitalize it. But if there is a trade discount given, if you bought the instrument at a discount, trade discount is supposed to be capitalized. sorry, for P or L, you treat trade discount as normal expense. Please, you don't capitalize it. But for amortized costs, you deduct transaction costs from the instrument, and also you add trade discount. You capitalize trade discount for amortized cost. Those are the two treatments for debt. You fair value through P or L, or you carry them as amortized cost. Now, like I said, how do you determine the closing value for amortized cost? It's easy. You look at your initial value, that is the purchase price. Then you add your effective interest on the instrument. Every debt instrument carries the interest rate. Preference shares, they can tell you that a company issue a 6% preference shares with coupon payment twice in a year. That coupon, 6%, may not be your effective rate because the coupon payment is more than once. But if it is paid once in a year, then your effective interest and the coupon rate may be the same. You determine the effective interest rate. How to determine effective interest rate is also stated in the papers. That you can just read that up. There are things that we all know as chartered accountants. Then you deduct your payments, both principal and interest that has been paid, you deduct from it to get your closing value. If for a performing debt, the closing value will always be lower, be reducing from the initial value. Once both interest and principal is paid, it will be winding down. And that's why it is called amortize. You're winding it down till you get to the end. The last thing I will talk about for this discourse is the issue of impairments. Is the issue of impairments. We all know that investment you have at the beginning of the year, you may not realize it in full at the end of the year. Take, for instance, all things being equal, you have cash in a bank. Except for bank charges, which are normal transaction costs, you should be able to get your cash at the end of the year. But what happens if the bank becomes distressed? Oh, some of us will say NDIC will come to the rescue, but we all know that NDIC may not pay you the full amount you have in your account if what you have there is beyond some level of thresholds. They may not pay you. The same thing for some equity. Equity in some company, all things being equal, it's not supposed to reduce in value. Yet there may be some swings in terms of their prices, but that does not mean that there's diminution in value for those assets. It's just the performance of the market. With time, it will change. So for impairment of financial assets, we look at some instruments. I would say there are some instruments that are not covered under this standard, that they will fall within impairment treatment. Things like cash, all things being equal, cash, your cash in bank remain your money in bank, except for bank charges, which are normal transaction costs. Equity, there will be swings, but except the companies go under, it's not going to be impaired. So the rule does not really look at that. But like I said, there are instances where cash and equity may be impaired. For instance, if you have a investment in listed equity on the Nigerian exchange, and the company had issues, and the exchange had to suspend them or has to remove them from their platform. For such an investment, you may not recover your money. So you may just have to impair that. That are exceptional situations. But we're looking at normal day-to-day transaction that could lead to impairment. And the ones that the standard really speak to are debt instruments. Debt instrument. And the standard look at debt instrument from the eyes of a lender. You lend somebody money, there is possibility that the person will not pay you full value of the money they borrowed from you at maturity due to things that could happen to them. And to compute impairments, the standard recommend the use of expected loss model, expected credit loss model, the ECL model. This is what is used to impair financial instruments that fall within the debts. The ECL model comes in 3 stages. There are 3-stage classification of debt. The first stage is that, which is stage 1. Immediately you give out debt, you lend somebody money, even though there is no possibility of default. The standard is saying, please make provision for impairment, just as if you may not recover some of the 12-month obligation of this creditor, of this debtor, sorry, that you may not recover it. So the standard on stage 1 says, oh, there is nothing you just gave. There is no significant credit risk on the borrower, on the debtor, but the standard requires that you should just make some provision. The standard does not tell us what amount of provisioning to make, but they gave some rules that could help organizations to develop their own rates to use in making provision. But at the initial stage, the rate used is usually so small, between 1% and 5% maximum by organization. A lot of organizations don't use such a high amount to provide. And they also have what we call 12-month expected credit loss that is ascertained. Out of the entire facility, it is not everything that is expected to be affected. They have what we call 12 months credit loss. Let's say you give out a loan of 1 million. The first 1 year, the expected credit loss could just be 200,000. And so you apply the rate provisioning on the 200 that you may think could go bad. At stage 2, there is credit risk that is observed. There's a significant credit risk that is observed. This does not mean that there is a default, but you are just saying sign that this person may not be able to meet its obligation when it falls due. Things like consistently the share price of the organization is dropping and the company is returning losses. First quarter, second quarter, third quarter, they are returning losses. Or they are losing key management staff. Or they've just lost a key contract that the company is banking on. And probably that was why they took that facility. They have not defaulted, but there is likelihood of default. Once you notice that there is a significant increase in credit risk, though there is no default, the standards expect that you should push such a debt to stage 2. And then stage 2, you apply what we call the lifetime credit loss rule in making provisioning. You apply what we call the lifetime credit rule in making provisioning. And at the third stage, if there is a default, either of interest or interest and capital, to just be one default, at this stage, you put them on stage 3. For stage 3, the rates used is usually higher. It's usually higher, but you also look at their lifetime expected credit loss, which is usually huge. For stage 3, what you do is look at how much have you collected from this debtor up to date. How much is left? What is left is the possibility of the loss you will incur. you apply a high impairment provisioning, sometimes as high as 75% of that. And then for computing expected or effective interest, you use the net carrying amount to compute the interest you will recognize on that debt, because you are not expected to recover everything. So it's a lot of prudence for you not to begin to accrue for interest when you are not sure you will get them. So these are basically some of the rules that governs the operation of IFRS 9, accounting for financial instrument. I've tried to put here on this slide what we guide what you would do in case of impairments. I'm trying to run because of time. Disclosure, okay, here is just some measurement of expected credit loss. There are things we can always read up. For disclosure, there are two levels of disclosure under IFRS 9. There is qualitative and also there is a quantitative. For qualitative disclosure, all disclosure are to be made by way of notes. They are to be made by way of notes. There are things like your exposure to risks for qualitative, your objective in your policy. From the disclosure, you need to tell the user of financial statements what the business model of the organization is with financial instruments. Do you want to hold them for trading purpose? You want to hold them to collect and also to trade, or you want to hold them to just collect at the end of the period? So you must disclose by way of note. Please note that whatever policy you chose at the beginning of implementing the standard, you are expected to use them consistently. But there may be some situation that will warrant for you to change your policy. Those situations were clearly spelled out under the standard, so that year one, you don't apply fair value through profit or loss because it favors you. Year two, you change to fair value through other comprehensive income. Then year three, for debt instrument, you begin to use the amortized cost. No, the standard wants you, once you pick one principle as what you will use, expect you to use it consistently throughout the duration of the organization, except condition warrant that there is a change. And those conditions will be well disclosed on the statement of financial state, on your financial statements. In conclusion, IFRS now has brought back prudence in the preparation of financial statements at a more sophisticated and refined level. And this will ease the review and interpretation of financial statement by various users of financial statement, and it will eliminate ambiguity and reduce subjectivity to the barest minimum. I want to thank you all for giving me this time. Thank you. I'll just stay back to take some of our questions, if there are any questions. Thank you.
Thank you so much, Mr. Paz. Thank you so much. Thank you so much. We appreciate you for this. Appreciate you for this session that you just had with us, and also that you are able to do it within this limited time that was given to you. Another thing I must say is that I will see that the knowledge is there from your voice. Thank you. I can confirm that. Thank you so much. Thank you so much. Our professional colleagues, we listen to our speaker, and it's now time for us to ask or present our questions to him. If we have any area where we think he should give us more clarification on, please, if you have a question for him, can you please signify by raising hands? If you have questions for our speaker today on this subject matter. Okay, I can see. Okay. I think I could only see. So maybe from my hand here, I'm only seeing the number. I can't see the names of people that are raising up their hands. Jensek, please, can you see their names?
Yes, we have Mr. Shola Peters Olumao.
Yes.
Okay,
Good
please, can you
evening, sir.
undo that? Can you help me to undo that? Maybe we just take like 3 or let's first take the first 3. We have more time. We can take more. Let's first take the first 3. Please help me to undo that. I can't see their names from here.
Okay, sir. All right, Mr. Shola Peters.
Yeah, hello, sir. Good evening, sir. It's a fantastic lecture, and I do enjoy it very well. But the problem I have in my own end is that I had a network problem, not stable. Therefore, my appeal, I just want to appeal to the district to help us send the recorded version so that I can go over to it in the midnight, please.
Okay, so noted, sir. Bashir
Yes, sir.
Mustafa.
God bless.
Yes, sir.
Okay. Good afternoon, everyone. Thank you to our presenter for the well taught and well delivered lecture. It's always a very intriguing aspect for IFRS 9. My question is just on a particular aspect, which I don't know. I also had the network glitch during my, I don't know, maybe you made mention of anything about it. Is which kind of financial instrument or under which kind of financial instrument can we classify the cryptocurrencies that currently there is new trends that are happening, and what kind of way can IFRS 9 also help in reporting cryptocurrencies?
Okay, Oluwayemisi.
Thank you. Thank you so much. So my question is, for financial assets, you said by default, financial assets are recorded through P&L. Can you hear me? Am I audible?
Yes, you are. Please go ahead.
Okay. Yes. So financial assets is basically recognized through P&L. Please, can you can you explain the assets that are recognized through OCI and what are the conditions? And then if you can also briefly touch on amortized cost again. Thank you.
Okay, thank you. Over to you, our paper presenter, sir. Hope you got the questions.
Yes, I did. Thank you so
Okay.
much. Bashir
All right.
Mustafa, I want to know under what financial instruments would we classify cryptocurrency? If you look at the characteristics of cryptocurrencies, it operates like shares. Even though it is said to be, it is used for settlement, more like cash, but it operates like shares. The prices go up, comes down like shares. So if you have cryptocurrency, you treat them as equity under financial asset, and then you fair value them through P&L depending on the business model you're running. Like I said, the default is fair value through P&L for equity, depending on the business model you're running. If your business model is you want to hold it perpetuity,
There is a small pole.
then you use other rule for it. But if your business model is for you to treat it like a trading asset, then you fair value through P&L because they operate like equity. Today the price is up, tomorrow it comes down based on information, which is the same thing that drives the prices of shares on the capital market, available informations. Like what happened recently when Donald Trump announced the Bitcoin for US. There is a crazy move, upward swing. Tomorrow, if Congress says America is not going that way, it will drop. So they operate like equity. So for me, I will classify them under equity. Then Oluwayemisi said that I mentioned that financial assets by default are classified under fair value through profit or loss. Yes, that's what the standard says. If a user of financial, if a company does not disclose their model, it is assumed that they've applied the fair value through profit or loss for their financial instruments, equity instruments. But they have the option of election. They can choose to fair value through OCI. They can choose to fair value through OCI. Now, there are some instruments that you don't readily get their value on a day-to-day transaction. Those instruments is always advised that you don't carry them through your P&L because you can't mark to market on a regular basis. Example are investment in unlisted equities. You have shares in companies that are not listed on the stock exchange. You may not easily know their prices. In fact, you may not even know what is going on in the company until they release their results and they give it to you at an AGM. So it may be difficult for you to fair value such organization on a regular basis. So it is usually advised that you carry such through your OCI. I don't know if I've been able to answer all of the concerns.
Yes, I think you've done that. We just have another person that I can just say, Olaroju Ayobami, please let's just take your question as the last one for this January session. Can you quickly, let's have your question. Olaroju Ayobami. Okay, if he's not there, I think we can move forward. My chair, I think I can hand over this session back to you so that you help us to appreciate our speaker for today. And also please that the just help me to present the award or share the, say thank you for that. Chairman, over to you, sir, so that you help us to handle this aspect
Thank
of
you.
presentation.
Thank you very much. Thank you for this wonderful section. I know Dr. Pius will do justice to the topic, and is one of our facilitators at FRS2. Before I will call on one of the past chairmen to appreciate him and present the plaque to him. We definitely know that we still call on you to come and present. Though he's our member, they are not paying you, he's doing it for free. Let me use this avenue to welcome the pioneer chairman to I can see him online. Dr. Bingomidiji, you are welcome, sir. And my past chairman, Professor Godwin Oyedokun, let me invite you to come and appreciate our paper presenter and present the plaque to him.
Which one are you inviting out of the two?
I'm inviting Professor Godwin Oyedokun.
Okay, thank you so much, my chairman. And I really want to welcome the pioneer chairman of this important district society of Ican. And it's on that note, I recognize everyone that are here, and including our visitors from other district society. Dr. Pius Double is son of the soil, like our people will say. When we were looking for who to do this, and they told me, I said, go and meet City for Ocon. You know who to call from ACFA. And we thank God that he's been able to use his calm attitude to take us through this particular class. Dr. Pius, thank you so much for your time. We know how it is for executive of your nature the position in which some of us are still praying to become one day, to have this time to come and talk to us. Thank you so much. And we pray that your wisdom will continue to be watered in God. Thank you so much for coming to talk to your people. And in our usual characteristics, the plaques for this appreciation is already displayed, and we appreciate the fact that you take it electronically while the hard copy will be sent to your office very soon. Thank you, Dr. Pius. We appreciate you.
My pleasure, sir, my prof. I'll
So
follow
thank
in
you.
after your footsteps. Thank you,
Thank
sir.
you, Doctor. Thank you, Dr. Bios. So we will deliver the
Thank you,
plaque
sir,
to
my
you.
chairman. I
Yeah, to
appreciate it.
your
Thanks for the honor.
to your address, and we really appreciate you. Before we move to continue with the introduction of new members, we like to hear a word of wisdom from our pioneer chairman and a council member of the institute, Dr. Gbenga Omidiji. Just 1 minute, sir.
Thank you very much, Mr. Chairman, distinguished professional colleagues. It's been nice being on this meeting, on this call, and it's been a very good technical session, as usual. So I just want to commend the district for keeping the flag flying, and I wish us all a very beautiful week ahead. Thank you.
Thank you, sir, our pioneer chairman and our councillor in the Ican Council. Let me hand over back to the General Secretary and the Vice Chairman. We have been introducing all the new members, and we have like about 18 remaining before the technical section. So you can raise up your hand now, and we continue. Over to you, Baba Ishola.
Okay, my chairman, thank you. So for our new members, we want to continue from where we left it. So kindly raise your hand if you joined the district from December 29, 2024 till today, and this is your first time of attending our meeting. So I'll call your name, introduce yourself, your name, your membership number, and where you work. We want to know you. At least this first set of introduction, while we know you more. So Caroline Oduadari, please unmute and introduce yourself.
Good evening, everyone. My name is Caroline Namolola Oluwadare, MB065923. I work at PwC, the Capital Markets and Accounting Advisory Unit. I'm a consultant there.
Okay, you're welcome. Okay, Mr. Shola Peters. Mr. Shola Peters. Okay, Oluwaseun Idowu. Oluwaseun Idowu. Okay. Can we have Michael? Okay, can we have Chinwe Egbuno?
Yeah. Good evening, everyone.
Yeah, good evening.
My name is Chinwe Egbuno. My membership number is MB055652. I work with Nigerian Port Authority as an accountant.
You are welcome. Eh?
Thank you, sir.
Wale. Can we have Wale? Please endeavor to always name your device with your full name. Please go ahead.
Good evening, everyone. My
Yeah,
name is
good evening.
Wale Akishon Ismail Olawale, MB 064481. I work with Timekeepers International Limited as an accountant.
Oh, good. You're welcome, sir. Mojirade Adedokun.
Good evening, everyone. I'm Adedokun Juliana Mujirade, MB 064326. I work with NECO, National Examinations Council, as a principal accountant.
You're welcome, huh?
Thank you.
Loy. Okay. And we have Chioma Ojike.
Good evening, everyone.
Good evening.
My name is Chioma Ojike. My number is MB059503. I work with PSG Nigeria Limited. I work in the finance department as a senior executive. Thank you.
Good evening, everyone.
Can we have Sulaimon? Okay, Loy. Go ahead.
Lois. Good evening, everyone. My name is Efosa Lois Maswen. I work at Jibenga Badejo & Co. as an associate audit assurance team, Ikeja, Lagos. Thank you.
You are welcome. Yeah, Sulaimon Damilola.
Good evening, everyone. My name is Sulaimon Damilola Opemekbo. My membership number is MB066001. I work as an accountant at Deadfield Solicitors and Associates. Thank you.
Welcome. Okwayemi.
My name is Arabi Okwayemi. My membership number is MB064563. I work with Super International Travels as an accountant. Thank you.
Okay, welcome. Cecilia Opani.
Good evening. My name is Cecilia Opani. I work in Creme Nigerian Limited as the accounts and finance lead. Thank you.
Membership number, please.
My membership numbers 065232. Thank you, everybody.
Okay. Yeah, Stephen Abiagom.
Okay, good evening, everyone. My name is Stephen Abiagom. My membership number is 065599. I work with Prudential Zenith Life Insurance Limited as an accountant.
You're welcome, sir.
Yeah, thank you.
Hi, good evening, everyone. I'm Olatomiwa Unibaba. Membership number MB061762. I work with PwC Nigeria as a tax consultant. Thank you.
Okay. Ekeanya Emmanuel. Ekeanya Emmanuel. Oluwatomi Sin. Oluwatomi Sin.
Yes, good evening. Oluwatomi Sayimoniashe. Membership number 064601. I work with Deloitte and Touche, the tax and regulatory unit.
Okay, you're welcome, madam. Olamilekan Esuru Osho.
Hello, everyone. Good evening. My name is Olamilekan Esuru Osho. Membership number MB065779. I work as an auditor with BDO Professional Services. Thank you.
You are welcome. Bakare Balikis. Bakare Balikis.
Good evening, everyone. Bakare Balikis. My membership number is 065728. I work as an ERP functional consultant and project manager at Blue Cloud Tech Consult.
Okay, you are welcome. Samuel Abuola.
Good evening, everyone. My name is Samuel Abuola. Membership number MB064418. I work at SunTrust Bank Nigeria Limited. I'm a market risk officer.
You are welcome, sir. Akeju Oladayo.
Good evening, everyone. My name is Akeju Oladayo with membership number 064463. I work as an accountant at Apex Oil and Gas. Thank you.
You're welcome. Elias Ugu. Elias Ugu.
Good evening, everyone. My name is Ikechukwu Elias Ugu. Membership number MB040781. I work with MPF Microfinance Bank as the task manager.
You are welcome, sir. Grace Adaji. Grace Adaji.
Grace Adaji. Membership number is 064299. I work as a treasury and account officer with Igds Electric. Thank you.
You are welcome. Umai Okoronko.
Good evening, everyone. My name is Umai Okoronko Augustine. My membership number is MB065222. I work as an accountant in Universal Insurance PLC. Thank you.
Welcome, sir. Alashe Emmanuel. Alashe Emmanuel. Kehinde Titi Loye.
Good evening, everyone. My name is Kehinde Titi Loye. My membership number is MB065523. I work at Nigeria Limited at finance and admin lead. Good evening. Thanks.
You are welcome, sir. Ogunremi Samson. Ogunremi Samson.
Good evening, everyone. My name is Ogunremi.
Please go ahead, Ogunremi Samson.
My membership number is MB at Eltis Farms Limited as internal control.
Okay, you
My
are
name
welcome,
is Ogunremi. Thank you, sir.
You are welcome. Ekeanya Emmanuel, are you there now?
Good evening, everyone. My name is
Good evening.
Ican Emmanuel. My name is Ican Emmanuel Chinonyi. My membership number is MB064718. I work at Iyanwesi Services Limited as a logistics support services and also a stock controller. Thank you.
You're welcome. Alashe Emmanuel.
Yes, good evening. My name is Alash Emmanuel. My membership number is MB0064517. I work in Mountain Investments as an accountant.
Okay, you are welcome. Adesimi Otudero. Adesimi Otudero.
Okay, good evening, everyone. My name is Adesimi Otudero. We are MB 065400. I work with Cornerstone Insurance PLC as an internal auditor. Thank you.
You are welcome. Michael, can we have Michael now?
Okay, good evening, sir. Good evening. My name is Michael Odu. Membership number MB 065122. I work with Wema Bank as a relationship manager. Thank you.
Your name again, sir?
Michael Oduole.
Okay, all right. You're welcome, sir.
Thank you.
Okay, I'll just give opportunity to this man. We encourage people to have their devices named properly. You have your device named as Alabi's iPhone. Can you unmute and introduce yourself?
Yeah, good evening, everyone. My name is Alabe Sharafa Wale. So MB is 06511. I work in Logi Fiber Limited as the head of account and finance.
You are welcome, sir.
Yeah, thanks, sir.
So, my chairman and distinguished members of the Model District, here we have the new members that just joined us. Are just newly registered as members of the Model District, and I want to say you are in the right place. We are not just Model District by name; we are Model District in every ramification, and we mean it when we say we are Model District. So you have a lot to benefit by being members of this district. You have the opportunity to network with your fellow professional colleagues. You have the opportunity to own your skills, to learn new ones, a whole wide world of like something like a buffet is set before you. You determine how well and how far you can go with it. We encourage you to integrate very well with the district. We are all your colleagues. Join a committee, be active in all the district activities, and hope that it will be a worthwhile investment of your resources and time by joining the Model District. My chairman, sir, we have new members that just joined us. Thank you very much, sir.
Okay, thank you so much, Ibu General Secretary. You're all welcome. I know most of you attended the last welcome session for the new members, and maybe few who are senior members that are just joined us will not attend, and maybe few people that were unable to attend the section. So you're all welcome. And ordinarily, this meeting should have been physical because we had the welcome session in the same venue last week. So just okay, we don't want to stress our members, and we only make this monthly meeting a virtual one. So next meeting will still be virtual while we have our physical in March, and then after then we have another physical in May. That is how we alternate it. We do have our meeting every last Sunday of the month, unless if there is maybe unforeseen circumstance that we, maybe allow us to change it. You are all welcome to Model District once again. On this note, we move to instead of going for AOB, I will say we should go for the closing of the meeting. From the table of the ESCO, let me see whether we have any other announcement before we ask for the motion for adjournment of the meeting. My vice chairman, do you have any item, any announcement before we close the meeting?
My chairman, sir.
Okay.
Thank you, sir. I think we've exhausted most of the things that we have. And the other inputs that we have, we've also mentioned it, sir. I think you can go ahead and close the meeting. Thank you very much, sir.
Thank you, ma'am.
I'm seeing, okay, sorry.
Baba
Yenuga. Baba Yenuga.
Okay.
Good afternoon, everyone.
Good afternoon, sir.
My chairman, I wish you could sensitize the new members with the upcoming Western Zone Accountant Conference. Maybe once again.
Okay.
Because it's very, very close now.
Yes.
Thank you very much.
Yeah, we've mentioned it initially, but it's good we, re-emphasize it before we go.
Okay. Sorry, I
the
joined the meeting 30
is
minutes
coming
late
up
because of
next
the
week.
network.
Yeah, it's coming up next week. And as we have said, we want you to register EMAS because 2026 IGDS is the host, and we want to prove a point that we can do it. And as I've said, I told you, apart from the academy, apart from the training, the third day, which is the gala night, we are bringing Ishegun Johnson. I don't know, maybe a few of you may know him, but I know he's one of the, musicians that the highlights and the young one are following now. So we are bringing him to come and play for the gala night. And I'm expecting before the week runs out, IGDS must have registered up to 300. I'm very sure of that. Please let us register. Like I have said, if you have any issue with registration or payments, just chat us and we handle it for you. And after the meeting, we will post the names and the contact number of the ESCOs. So you can chat any of us for any issue relating to your payment of district due, Ican subscription, and many other things. So thank you and God bless. I can still see one hand up.
Yes, sir. I have
Okay.
a question.
Oh,
This
yeah,
is
ask
a
your
question.
question, please.
Okay. What I would ask is the class we just had, and it was recorded. I hope that it's going to be shared because I didn't really pay too much attention, like the class recorded classes.
What is your name? Because
Fosa Lois Maswen.
Lois what?
Fosa Lois
Efosa.
Maswen.
Okay, because your name is just showing Lois. Okay. So we share we have recorded it on YouTube. We will share it immediately after the session, and then we still share the slide. Yeah.
Yes, all right. Thank
Okay.
you very much.
Is that okay? What of Mr. What Alabi Sarafa?
Yes, sir. Yes, sir. Good evening, sir. Sir, my
Good evening.
question is that among the new inductee for December, so
Yes.
I happen to be one of those people, 10 people that I learned that are neither paid off for our due. So does it mean that for 2025, for this year 2025, we are not going to pay annual due at all?
Yes, if the header has paid for you, yes, we are not paying.
All right.
But
All right,
we still we need donation from you.
It's 50% though.
No, they've paid for some faucet.
Yes,
Okay, yeah.
like 10 of us.
The first 5 people, the head, Dr. Obideji paid for them.
I think I remember.
It's anonymous anyway. It's like I'm unveiling. So they pay for some people. So this Mr. Labi is part, I know.
My chairman, why are people letting us put the cat out of the bag?
Sorry, Jerry. But okay, no problem. Joshua, let me just entertain this one. If you have any other thing, you chat us. Joshua Elizabeth.
Good evening, everyone. My name is Joshua Elizabeth F. Young, membership number MB064932. I attended the last technical session that was held in December, but I didn't get the slides that talked about data protection. I don't know if that was shared. I just wanted to know.
We share the slide now. Okay, maybe we will share it. We've shared the slide.
Thank you very much.
So
thank you.
My chairman, sir.
Yes, ma'am.
Though I don't have any, but with the questions I'm getting, I'm just forced to say this, that our members should please take notice of things going on in the platform. We have a community for all IGDS groups. And so we drop information in the community. It means that everyone in the groups, we get that information. So please, just check. We also have business platform, which we don't allow it to be clogged up. But we have social platform, which you can express yourself, greet yourself, birthdays and whatever you want to pass. So always check the platforms. And if you go to the business platform, you will always know that there are information that people cannot just override, so that you don't miss out on important information that is shared at the platforms. Thank you.
Thank you. That is perfect. Endeavor to check all the platform for updates. Thank you so much. A member should move motion for adjournment.
Hi, good evening, everyone.
Good evening.
Chukwemeka Ibanugo is my name. Membership number MB063048. Having been present from the start of the meeting to the finish, I hereby move for the motion of adjournment of the meeting. So.
Okay, thank you. Mr. Festus.
Sir, please, so sorry for, I just want to ask, how do we join the business platform, sir?
Once you are a member, you'll be added to social and business. So if you have any issue with, maybe you lock your WhatsApp or whatever, okay, the chairman membership will get in touch with you.
Yeah, they will do that. Membership chairman will check. For those who are not there, they will add them. Yeah.
Okay. Thank you, sir.
Yeah. So who is seconding? Let me see.
Yeah. Good evening, Mr. Chairman, sir. Dikpe Oluwayemisola Lekon, MB 062817, second the motion for the close of this meeting.
Okay. Dr. Samuel Awosupin, as usual, give us closing prayer.
Good evening, everyone. Thank you for giving me the honorary doctorate. Okay, let us pray. Good evening. Our Heavenly Father, we thank you for this day. Thank you for the grace to have gathered for this first meeting for the year 2025. We thank you for all the deliberations. We thank you because they are successful and great deliberations to bring us to the great and enviable right. We say let your name be glorified in the name of Jesus. Almighty Father, we go through the very last week of this month, January 2025. We pray your grace, O Lord, will go before and ahead of us in the name of Jesus. By the time we'll be having cause to gather once again, we pray, O Lord, that you make us all have great and mighty testimonies to unveil in the name of Jesus. Thank you, Father, Lord, for answered prayers. Thank you. Hallowed be your name. In Jesus' mighty name we have prayed.
Amen. Thank you so much. The closing protocol, Ican item and the national item.
Thank you very much.
Bless God, I can count up treasure in triumph above the race, standing stronger in harmony, building a land together. Dreams of a founding fathers, we are striving to attain all truths and values that we share. Through all ages we sustain. Institute of Chartered Accountants of Nigeria. Noble Ican, your accuracy we've cherished. We uphold your integrity.
you all. Yeah, don't forget to write your name if you have not. So I'm giving only 1 minute if you have not written your name.
Okay, thank you, sir.
Chairman, sir, I appreciate sir.
Yeah, thank you.
Sir.
Good evening, sir. Thank you very much, sir.
Good
Thank you,
evening.
my
Thank
chairman,
you.
sir.
Thank
Please,
you.
sir, do you write me?
Write it in the chat box.
Okay, sir.
Thank you, my chairman, sir.
Yeah.
Good day, chairman, sir.
Yeah, thank you. Happy Sunday.
Yes, sir. I wish you the same, sir.
Yeah.
Yes, sir.
Yes,
Yes, sir.
Ebuko.
I see your voice.
Thank you very much, sir.
Yeah, thank you.